point?
Yeah, so Q3 is the big quarter. The great news is we are on track. We're very confident now that we're going to see underlying profits growth this year. That's the first time in some years that we've managed to do that. So there's a lot still to do, but we've now had 7 successive quarters where we've performed in line with or ahead of our expectations, and that gives us increasing confidence. As I say, lots still to do, but the recovery that we've been working so hard on is now really starting to take shape.
The US higher education business has been a bit of an issue for your company, and we know that there's still issues there. Revenue's down 3%, but this is a huge chunk of the business, what, 30% still. What is the rate of decline like now in context, and how concerned should investors be still?
We are the 30% of business that is in our US higher education courseware does face some structural challenges over the next 2 to 3 years. We're running that business on the basis that revenues could be down by as much as 5% per year through to the end of next year. So the fact that we're down 3% at 9 months, having got through the biggest selling season, is pretty much in line with what we were expecting. So that, as I say, gives us some confidence and encouragement. The exciting part is then the other 70% of Pearson in aggregate is growing. And with now the fact that we've got a very strong balance sheet. If you remember, a couple of years ago we had over £2 billion of net debt. We've halved net debt on the same period last year. We will be virtually debt free by the end of this year. That's enabling us to really ramp up the organic investment in the big growth opportunities. Online program management, where we partner with universities to launch fully online degree programs, registrations up 14%. The Pearson Test of English up 34% in registrations year to date. So the 30% is performing exactly as we expected it to, and the 70% is growing and giving us real confidence for the future.
John, give us a line on the operating environment generally. How do you see the bigger picture in the markets that you're working in at the moment?
I think I'd say there's sort of 2 things going on. There's businesses like our higher ed courseware business, where we're the incumbent, we're the market leader, very strong, high margin, highly profitable business, but going through this period of disruption as we go from analog to digital, and we just have to sort of understand that and manage our way through hard. On the other side, digital disruption is creating all these exponential growth opportunities for us that we then have to invest through the P&L, and they're at the point where they are nascent. They're still in relative startup mode. The margins at this point aren't great, but they will be very strong. And I think, as an incumbent, it's this sort of 2-speed twin track, which I suspect is pretty much, any major company that's an incumbent in any industry going through digital disruption is having to manage, and doing the 2 together is hard, but ultimately very rewarding and exciting. And as you see, we're very much on track to deliver that.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.